Good afternoon to all, and thank you for accepting our invitation to share with you today some highlights about the investment opportunities in Puerto Rico. Today, Tax Manager Caroline Lopez is going to be helping in the presentation, especially in the area and discussion of the tax incentives. Some housekeeping notes for you to have. We'll be recording the presentation, so later on you will be able to review it in our YouTube channel. So wait a couple of days and it will be uploaded to our channel. You all will receive the presentation at the end via email. So hang in there and make notes that you will get the presentation after the seminar. And also, all the questions that you may have, please write them down there in the participation feedback Q&A box. We'll be reviewing them and answering them throughout and at the end of the presentation. If by any chance we are not able to attend all the questions, please rest assured we'll be contacting you via email to provide you the answer. And to avoid any noises or background noises, all of you are muted. So please write down your questions on the feedback box. Before sharing our agenda today, we always like to share with you our values, our global values as part of the Grant Thornton International Network. Our values: collaboration, leadership, excellence, agility, respect, and responsibility. Clear. We apply them every day with our clients, our staff, and with our community. Today, we are putting into practice several of these values. Just to mention a couple: collaboration and responsibility, to again collaborate with our community and those interested in coming down to Puerto Rico and learning more about Puerto Rico, and our social responsibility to share our knowledge. We have separated 1 hour for this webcast, so we'll be trying to include in that hour a lot of information. Again, if at the end you have additional questions, please feel free to log them in the Q&A box or send them via email. Our topics for today, we're going to be talking a little bit about the interplay between federal taxes and Puerto Rico tax rules, because this part is very important in order for all the program to really work. We'll review a little bit about Puerto Rico as a tax jurisdiction. Later, Caroline will talk about Act 20 and 22, now part of Act 60, which is the incentive codes of Puerto Rico. And then at the end, we'll talk a little bit about the Opportunity Zones program and how this program interplays with the tax incentives we just have discussed. During the presentation, we'll be also making some polling questions to gather some information from our audience. So please, whenever the questions come up, answer them so we can continue with the presentation. So the first polling question: are you considering to establish a business in Puerto Rico? Yes or no? Couple of seconds for you to answer. This one is kind of an easy one. So let's skip to the results. And we see that 80% of the audience is thinking about establishing or considering establishing a business in Puerto Rico, which is very interesting and very good to know. So the information you're going to get today will be helpful in supporting you in that evaluation. Okay, we're closing the poll. And let's start talking about the interplay between federal and Puerto Rico tax rules. Important. These are very simple and basic items of knowledge, but they are essential for the program, the incentives program, to work. First of all, individuals that are born in Puerto Rico are U.S. citizens. Okay, so we are born in Puerto Rico, we have a U.S. passport, and we can go in and out the U.S. as any other person that has been born in the U.S. Puerto Rico is considered, though, a foreign jurisdiction for U.S. tax purposes. So this is where the complications kind of start. Even though citizens born in Puerto Rico are U.S. citizens, Puerto Rico corporations, for example, our business entities are considered foreign for U.S. tax purposes. Section 933 of the U.S. Tax Code has a special provision for Puerto Rico bona fide residents that even though are U.S. citizens, and as you already may know, U.S. citizens are subject to U.S. federal income tax no matter where in the world they live. But for Puerto Rico bona fide residents, Section 933 states that Puerto Rico source income will not be subject to U.S. tax. This is very important to keep in mind. And that Puerto Rico entities organized, corporations, partnerships organized under the Puerto Rico laws, are not subject to U.S. taxation unless they actually are engaged in a trade or business in the U.S. or has some kind of income derived from U.S. sources. Okay? Income derived from operations of U.S. corporations in Puerto Rico has been subject to special tax provisions since 1921. We can talk about Section 931 and Section 936. If you all remember, those sections provided a special tax treatment for subsidiaries of U.S. corporations that came to Puerto Rico to engage mostly in manufacturing businesses. Also, we need to keep in mind that because of all this special treatment for Puerto Rico source income, back in 2006, the IRS issued some stricter requirements to be able to be qualified as a Puerto Rico bona fide resident under Section 937. So that's where, and we'll be talking a little bit more down in the presentation, where three very important tests must be complied with in order to qualify as a bona fide resident of Puerto Rico for U.S. tax purposes. And just to keep in mind that all these special tax rules related to the territories, today we're talking about Puerto Rico, we are primarily intended to support U.S. corporations to compete with foreign entities, that had preferential treatment in other countries. So, if you only remember one thing from this presentation, please remember that Puerto Rico source income derived by a bona fide resident of Puerto Rico is generally not taxed by the U.S. government. And this is the key for the tax incentives that we will be talking about in our webcast. Key elements that we need to have in mind and keep in mind, again, before talking about the exemptions, is that Puerto Rico source income can legally avoid U.S. taxation and access numerous incentives with very reduced income tax rates ranging from 0 to 4%. And there we present to you several industries and specific type of businesses that can benefit from these incentives. For example, in the technology industry, we can talk about biotechnology, electronics, renewable energy, creative industries, export of services, advertising, software as a service, agriculture, tourism. For all these type of businesses, you might find a special exemption or incentive program in Puerto Rico. But again, sourcing of the income is key because the income must be sourced in Puerto Rico. So we need to understand these sourcing rules in order to conclude whether our activity will qualify for these incentives. First, in the case of services, services are always sourced where they are performed. This is very important. If you create an entity in Puerto Rico that you want it to benefit from the, for example, Act 20, which is the export of services, by only having the entity incorporated in Puerto Rico, that doesn't mean that the services are going to be sourced in Puerto Rico. You need people working in Puerto Rico to have income source from services in Puerto Rico. So it can be done through the internet, it can be done through the phone, but physically the employees or the person rendering the services has to be in Puerto Rico. In the case of interest income, the sourcing is where the person or entity making the payments is a resident of. In the case of dividends, it's the country where the company or the corporation was incorporated. In the case of capital gains, in the sale of personal property, it's where the seller resides. In the case of royalties, where the property is used, and in the case of real estate, where the property is located. So these general sourcing rules, please keep them in mind, because when you're considering coming into Puerto Rico, it's very important that you comply with the sourcing of the income in Puerto Rico in order to avoid the U.S. taxation. Okay? With that, I leave you with Caroline, who is going to be talking about two specific incentives that we have in Puerto Rico and how they came to be part of Act 60 or the Incentives Code. Caroline.
Thank you, Maria. Good afternoon to all. This is Caroline Lopez, and in the next couple of slides, we are going to be talking about two very important regimes in Puerto Rico, which is for export services and individual investors, commonly known as Act 2022. But before jumping into those specific incentives, we're going to talk about Act 60, which was recently enacted in July 1st of 2019. So this is a really new law. And Act 60 is known as the Incentives Code of Puerto Rico. And this act codifies incentives that has been granted in Puerto Rico for many, many years. So this is the comprehensive law in Puerto Rico that is going to be, that has all the laws in Puerto Rico in terms of incentives. So commencing on July 1st, all incentives will be located and will be enacted under this law. However, applicants can still elect to apply under Act 20 and 22, for instance, and other laws until the end of this year, or under Act 60. However, applications will have to be submitted under the terms of Act 60 2019 under the Incentives Code commencing on January 1st of 2020. So we don't want to complicate the conversation. We're going to discuss 20 and 22 as we know them as a regime. They still are, they are still, we're adopted under Act 60. However, we have to discuss both 2022 and Act 60 because it really depends on when you apply for the benefits, okay? So that's why we're going to be discussing the two of them in the presentation. Okay. So let's jump into Act 20. Act 20 applies for export of goods and services, so it applies to legal entities. Act 20 was enacted originally in 2012 with the intention of converting Puerto Rico into an international services hub. So the idea behind the program was to, one, incentivize local businesses to export their services. Of course, we're an island. We need clients outside of Puerto Rico. And encourage foreign companies to move to Puerto Rico. The incentives, in a nutshell, are pretty straightforward. This is to be taken into account with what Maria was mentioning. The common structure here is a Puerto Rico entity, generally an LLC. That LLC renders these export services from Puerto Rico. Services are sourced in Puerto Rico, so generally no U.S. taxation, and this is the Puerto Rico tax treatment. The entity is taxed at a 4% fixed income tax rate, 0% on dividend distributions to owners, 20-year exemption period for that treatment, and certain other municipal exemptions, which is 60% exemption on a local taxation that we have in Puerto Rico. It's a municipal license tax. It's a gross receipts tax. And certain activities are granted a 90% property tax exemption. So these decrees are valid for 20 years. They can be extended 10 more years. So this is Act 20, the incentives as they are today. Again, these incentives were maintained by Act 60, by the Incentives Code. However, there are certain changes that we highlight in this next slide. 4% fixed income tax rate is maintained. 0% dividend distributions is maintained. The duration of the decrease changes a little bit. Now you'll have an initial term of 15 years, but this can be extended 15 more years. So the total term of the grants will be 30 years in total. The municipal license tax changes a little bit. It is reduced to 50% instead of 60%, and the property tax exemption is applicable to all activities now, so it's a 75% property tax exemption. The new item here is the employment commitment by law. Act 60 does require an employment commitment of 1 employee. Let me go back there. So it depends on the growth of the volume of business. I'm going to jump some slides to talk about the employment. Okay, let's go into employment after we cover these. Okay, so that is the new requirement. We'll talk a little bit about that in the next couple of slides. So what is the requirement? How can I be eligible for Act 20? As Maria was mentioning, the services does have to be provided from Puerto Rico. So you need to have a bona fide office or establishment in Puerto Rico, and that office is the one that carries out those eligible services. And an eligible service is defined as services that are rendered from Puerto Rico to markets outside of Puerto Rico. The services should have no nexus to Puerto Rico, and we'll jump into that real quick. And it's rendered to clients outside of Puerto Rico. So those are the general rules.
Here, I want to make an interjection here because several times we get this question asked. I want to come to Puerto Rico and benefit from Act 20. I'm going to incorporate an entity in Puerto Rico. I'm the only person providing services in this company, but I'm not going to move to Puerto Rico. Again, that wouldn't work because the services have to be provided from Puerto Rico. So if you are a one-man show, you need also to consider moving to Puerto Rico in order to benefit of the Act 20. Again, keep in mind the sourcing rules that we talked about at the beginning.
Okay. Okay, so with the rule about the nexus with Puerto Rico, we have here several examples for your reference. But again, the services have to be rendered to clients outside of Puerto Rico and no nexus. An example of this would be of a service that has a nexus with Puerto Rico would be providing consulting services to a U.S. company, which would be a client in the U.S. However, the services are related to the company's Puerto Rico facility. So that would have a nexus with Puerto Rico and so forth. So it's always important to keep in mind that before applying for Act 20, really look into what you're going to be performing and who's your client, what is the service is going to be about to see whether you really comply with Act 20.
Caroline, before we continue, we have a question that I think we need to attend. It's what is the municipal license tax? Okay. In Puerto Rico, most of you know there are 78 different towns. Each town has its own finance department, and each town collects what it's called the municipal license tax. It's what we call here the patente, or the volume of business tax. And it's basically like a permit to do business in the municipality, and the rate, it's the highest tax rate would be 0.005. That's the highest allowed by law, and it's computed based on the gross services, gross sales generated by the business. In the case of Act 20 businesses, they get a 60% exemption from that tax. So you might have, if you are operating in different municipalities, you might have different rates for this tax.
Okay. So this list is a complete list of the services that are eligible to obtain the benefits of Act 20. It is a pretty comprehensive list. It includes, the one of the main ones we see is consulting, advertising and public relations, financial industry, investment banking, trading companies, medical tourism, call centers. So there are many activities here in Act 20, and there is a provision that allows for other services to be determined eligible. So it is pretty open definition of what is an eligible activity. This slide, it has additional activities that were added by the incentives code. Again, this will depend on whether you apply for Act 20 before or after January 1st. So you'll see in bold the new ones. Basically, new ones are related to distribution in physical form, network, cloud computing, or blockchain, and income derived from subscription, licensing, or fees of programs. And then in creative industries, the sale of tickets outside of Puerto Rico or by tourists in Puerto Rico for certain transmission of events. So those were mainly the two of them, and then there is under the new incentives code, there are additions as well to the trading activity. Trading companies in Puerto Rico under Act 20, in general terms, should derive no less than 80% of their gross income from trading the trading activity, which includes the resale or commissions of products derived from the sale of products for use, consumption, or disposal outside of Puerto Rico, or from the export of services. That is how it is enacted under Act 20. However, Act 60 does allow for additional trading of intangible products. It expands the definition of trading. However, it does require that 80% is dedicated to the trading trading of certain products listed here in these slides, and any other international commercial traffic activity provided by regulation. So it's going to be, again, limited to that international commercial traffic activity. So that's in terms of the eligible activities. This next slide talks about the employment requirements I was referring to earlier on. The employment requirement is now at least one employee that would be required if you apply under Act 60, under the new code. But this will only apply if your annual projected or actual volume of business is more than $3 million. And it has certain requirements. The employee has to be a resident of Puerto Rico, has to work 2,080 hours, and has to work, of course, on the activities covered by the grant. There are certain rules here related to when you should be complying with that employment requirement. This rule applies whenever you have an actual volume of business of $3 million. You'll have 18 months basically to have 100% of the employment requirement. Again, the law says at least one employee, so the government may well impose an employment commitment of more than one. The Act 60, the new law, allows for flexible compliance of employment commitments. Under Act 20, these decrees do not have an employment commitment, so this is not an issue. But if you do have an employment commitment in your decree, of course you'll have some type of flexibility for compliance. And this is very important. if any one of you have a decree under Act 20 with an employment commitment, there were some Act 20 decrees issued that have 5 employees. Back a certain time ago, there was a law, an amendment to Act 20 that required 5 employees. So this law, the Incentives Code, allows you to submit an amendment to request that employment commitment be reduced to 1. So that is something you may want to explore as well to the extent applicable. So these are some of the potential pitfalls. This is part of the bread and butter we see every day with clients. Whenever we're talking about Act 20, the model, a lot of times includes services between related parties. So, of course, a transfer pricing study is always something to keep in mind and to have. U.S. tax implications when transferring U.S. operations or assets to Puerto Rico, tax withholdings in other foreign jurisdictions, whenever you're performing services in Puerto Rico and outside of Puerto Rico, and certain, many other, pitfalls. Again, we are talking about an international tax scenario, so it's always important to consult a tax professional that knows about the interplay of Puerto Rico and U.S. rules. The timeline to obtain an Act 20 tax grant, this is a question we get all the time. So the first step is determine eligibility, then the setup and government registrations, the filing of the Act 20 application, then there's an interagency review process. The Act is approved. Generally, based on our experience, it can take someplace between 3 and 6 months. And then you have to accept the grant within 90 days, and then you have, of course, the compliance after that. The effectiveness of the tax grant can always be retroactive to the date of filing of the Act 20 application. Okay, so the date of approval, of course, is going to be important, but the date of filing will be very important for the effectiveness of the incentives. So jumping into the individual investors incentives, this is commonly known as Act 22. The purpose of Act 22, this was enacted as well in 2012 with Act 20. It was intended to attract individual investors to relocate to Puerto Rico by providing certain tax exemptions to passive income. This is the incentives in a nutshell. Both for 20 and the incentives code, it doesn't change. 0% on certain capital gains, and we'll see which capital gains. Dividend and 0% on dividend and interest income, and a duration of these incentives until 2035. The capital gains, it's always very important to note that these 0% is going to be applicable to capital gains derived after the move to Puerto Rico. If you own assets that have gains accrued before you become a resident of Puerto Rico, those gains are going to be subject to Puerto Rico tax depending on when you dispose of them. If you dispose of the asset within 10 years of the move, you're going to be subject to a 15% capital gain rate in Puerto Rico. If you dispose them after 10 years, it'll be subject to a 5% income tax rate. There's also a special sourcing rule under Section 937-2 of the U.S. Code that deals with these types of capital gains. So the change here with the incentives code is that Act 22, for some reason, never included a definition of what was a security. What were the assets that were subject to this special treatment for capital gain purposes. So Act 60, be good or bad, actually finally gives us a little bit of clarity as to what is going to be considered a security for capital, for this Act 22 exemption purpose. So this is the definition. It includes notes, bonds, futures contracts, stock, debt evidence, and it is a pretty open definition that can, the Secretary of Economic Development can adopt by circular letter or other pronouncements in order to include more assets in that category.
Here is where it's very important to review the sourcing rules we talked about at the beginning of the webcast, and we have a question on the Q&A. If a Puerto Rico bona fide resident realizes gains on the stock market, by definition, that gain is sourced in Puerto Rico, and therefore, in general, will not be subject to U.S. tax ever. Notwithstanding that, and going back where Caroline was talking about certain capital gains, even when you become a bona fide resident of Puerto Rico, if you had some gain that had accrued before you moved to Puerto Rico, even though you are a Puerto Rico bona fide resident, when you sell that asset, that stock, part of the gain, that gain that had accrued before, would be subject to U.S. tax by operation of Section 937. And always if you generated or realized the gain within 10 years of your move. So again, when you're thinking about moving to Puerto Rico to benefit from Act 22, it's very important to see what is it in your bag, what gains you have there, and how they have been accruing through the years in order to be sure that you get the most out of the incentives.
Okay, so other assets as defined in this slide, including commodities, coins, and digital assets based on blockchain, those are also going to be promoted under Act 22. So that's an important addition by Act 60, by the new incentives code to Act 22. So these are the requirements under Act 22, okay? So if you file for Act 22 until December 31st of this year, you're going to be subject to these rules. This changed under the new law. So this is applicable to those people that are ready to file Act 22. So the first one there is you should not have been a resident of Puerto Rico at any time during the 6-year period before January 17, 2012. That was the date of approval of Act 20. So between 2006 through 2012, you shouldn't have been a resident of Puerto Rico. The next requirement is an annual donation to a local charity of $5,000. And then you have to become a resident individual under the Puerto Rico tax code. So here we have two regimes. We have the IRS rules under the Section 937, which we'll get into a little bit later on. And then you have the Puerto Rico residence rules. Puerto Rico is a domicile jurisdiction. So in order to become a bona fide an individual investor in Puerto Rico, you should have your domicile in Puerto Rico. So these are the requirements under the new incentives code. This applies again to individuals that apply after January 1st of 2020, or individuals that just want to apply under this law, after July 1, 2019. So the law requires that the individual should not have been a resident 10 years prior to the approval of the law, which is July 1, 2019. So we're going to look back to 2009, and then you shouldn't have been a resident of Puerto Rico throughout those years. The next point is the annual donation was increased to $10,000. That's annually, okay? And of those $10,000, $5,000 of them have to be destined to certain nonprofit entities that work with the eradication of child poverty, and that they're included in a list published by the Joint Special Commission of Legislative Funds for Community Impact. And then the third new requirement is the acquisition of residential real estate by purchase, as sole owner or with the spouse, within 2 years after the effectiveness of the grant. Okay, so that is a new requirement that actually used to exist in the law, was eliminated, and then it was brought back again. And then the grantee will have to demonstrate annually in the annual report that the grantee has exclusive and complete domain of real property for residential use through the term of the grant. So actually the person, the individual, of course, will have to demonstrate that that he or she is actually living in Puerto Rico. So this is, again, wrapping up in terms of what Maria was mentioning in the beginning. To the extent you have a bona fide resident of Puerto Rico, you're going to have the exemption under 933, which exempts from federal income tax, that Puerto Rico source rule derived by that bona fide resident of Puerto Rico. So that combined with Act 22 benefits is an amazing combination that we see working out pretty well with our clients every day. These are this is a very short summary. Of course, this is much more complicated than this, but just to give you an overview, the bona fide residence rules of the IRS require physical presence, tax home, and closer connection. Physical presence can be complied in several ways. The most common way is being in Puerto Rico at least 183 days of the year. That is every year. The tax home is having your principal place of business in Puerto Rico. And the closer connection, just having your family, personal belongings, banking activities in Puerto Rico. Okay, so that is more of a factor-driven test.
Important to mention, Caroline, that the three tests have to be met every year to be qualified as a bona fide resident of Puerto Rico. It's not a matter of the year of the move, but every year you are claiming to be a bona fide resident of Puerto Rico.
That is correct. And there are special rules for the year of the move as well. Okay, so the timeline to obtain an Act 22 grant, again, very similar to Act 22. The only difference here is that payment of a one-time government filing fee of $5,000. This is completely different from the annual giving that is required to the grantee. This is a one-time filing fee that applies after you have your approval of the Act 22 grant. You'll need to issue this payment in order to obtain the decree. Okay, so recap, because we have going to jump into opportunity zones, but just a recap of Act 20 and 22, okay? So once these benefits have been granted, you have a contract with the government of Puerto Rico. You'll have a secure tax treatment, of course, to the extent you comply with all the terms and conditions of the grant. For Act 20, the eligibility requirement is pretty simple. It's having that bona fide office in Puerto Rico and to render services to markets outside of Puerto Rico. In terms of compliance, it's pretty straightforward. In addition to other tax compliance, in terms of tax exemption, you're going to have to file an Act 20 annual report with the Office of Industrial Tax Exemption. For Act 22, eligibility depends on, again, when you apply, but you should have not been a resident of Puerto Rico from 2006 through 2012 for under Act 22. And you have to become a bona fide resident of Puerto Rico within 1 year or already be a bona fide resident of Puerto Rico. In terms of compliance, under Act 22, you have to file your annual report, your Act 22 annual report, and issue the annual $5,000 charitable donation to a Puerto Rico nonprofit. This is a recap under Act 60. An important item I want to mention with Act 20, Act 20 does introduce Act 60, the Incentives Code, an interesting change to the definition of eligible activities, because it now allows for the rendering of eligible activities within and without Puerto Rico. So that provides a little bit of flexibility to entities that need to have certain activities or functions outside of Puerto Rico. The issue there is the planning in terms of the sourcing and everything. So that is a change introduced by Act 60, by the Incentives Code. And compliance under the new law, as mentioned, you need to have the employment requirement to the extent you have a volume of business of more than $3 million. And for Act 22, you should not have been a resident of Puerto Rico 10 years prior to July 1st, 2019, and the acquisition of the residential real property. In terms of compliance, the annual charitable donation is increased to $10,000.
Great. Thank you, Caroline, for that excellent summary of Act 20 and 22 along with Act 60. It's time for our second polling question. And here we would like to know what is more important for you when considering coming to Puerto Rico to do business. The tax benefits, coming back home, contribute to the recovery of Puerto Rico, all of the above, or none of the above. Let's skip to see the results. And a couple of more seconds there. I think we have a good combination there of reasons for coming back to Puerto Rico. So I'm closing the poll, and basically 43% of the audience is saying all of the three mentioned are reasons to come to Puerto Rico. So thank you all for that. In the time we have left in our webcast, we would like to talk a little bit about opportunity zones and how we see the program, the federal program, and also the Puerto Rico side of it, getting into interplay with what we just talked about, Act 20 and Act 22, but not only Act 20 and Act 22, but with all the other tax incentives programs that we have in Puerto Rico. We don't have time today to talk about them, but I want to raise awareness that we do have, and they are now part of Act 60 also, incentives for green energy, incentives for manufacturing, for R&D, and development of intellectual property, for creative industries like film production and others, agricultural and other type of industries that can benefit also of an incentive program. Oh, I forgot tourism, which is very important here in Puerto Rico. So the program, the Opportunity Zones program, works in collaboration and is not mutually exclusive from the local incentives program. So it's very key, and especially these days, that will help attract investment into Puerto Rico, not only to benefit from the Opportunity Zone tax deferral, but also from the Puerto Rico Incentives Program. And we are going to be talking a little bit in summary of what are the Opportunity Zones. As you may all know by now, these zones came about out of the tax reform in the U.S. back in 2017, where two little small sections were included in the U.S. Code, where the government goal was only one: attract investment to distressed areas in all the states, also including the possessions, and Puerto Rico is part of that. Every governor had the ability to designate up to 25% of the low-income census tracts of their states as opportunity zones. Puerto Rico had the opportunity to designate 100% of its low-income census tracts as opportunity zones. So because of that, you see Puerto Rico maps all red, because 95% of Puerto Rico has been designated as an opportunity zone. That is very attractive when you compare with other states, because you will have nearly no risk of getting out of a zone in Puerto Rico, because almost all the island has been designated as an opportunity zone. And how does this work? Basically, the government is telling private investors, listen, I know you have a lot of capital gains accrued that had not been realized. We want you to realize those gains and take part of the gain or the full gain, if you wish, and invest it in a qualified opportunity fund, which in turn will invest in these designated zones through businesses or through the acquisition of property by the funds itself. What you get back, if you keep the investment in the fund for 5 years, you can defer the gain for 5 years, And on the 5th year, if you realize, let's say you sell your investment in the fund, you pay the tax on the gain, but only on 90% of the gain. You get a step up of 10%. If you keep it for 7 years, you get a step up of 15%, meaning that you only pay tax, capital gain tax on 85% of your gain. There is a required statutory due date for the recognition of that gain, which is December 31st, 2026. That's why it said that if an investor wants to benefit from all the deferrals that the law provides, the investment has to be made no later than December 31st of this year, 2019. If you keep the investment for at least 10 years, you got the deferral for 7 years of the original gain. You got the step up. You pay only on 85% of the gain. And what we call the second gain, or the increasing value of your investment in the fund, that will be fully excludable from income tax. No tax on that secondary gain. And that's the most important benefit granted by the opportunity zones. Again, this is a U.S. federal tax program. For Puerto Rico residents, remember we said that if you're a bona fide resident of Puerto Rico, your capital gains on personal property are sourced in Puerto Rico. If Puerto Rico did nothing to conform to this treatment, Puerto Rico residents would not have any benefit on investment in these qualified opportunity zones funds. But the Puerto Rico government approved a law back in May of this year, was called Act 21, which basically created conforming rules or introduced conforming rules to the U.S., meaning that adopted the same treatment for capital gains deferral and exclusion in Puerto Rico as long as the investment is made on Puerto Rico property, and also created a new incentives program for what they call priority projects. Today we don't have time to go through all what's included there, but basically what the new program, which now is part of Act 60, the incentives code, it says that if you have a priority project, which for which we are still waiting for the list of priority projects, it was supposed to be issued today. So we still have some time to receive that list today, but we don't have too much hope on getting it today, but soon we'll get the list of what constitutes a priority project. You can get special treatment for that priority project, and there we show you what's the exemptions provided by Act 21 and now Act 60 regarding this priority project. You will get a fixed rate of 18.5%, which is not 4% as Caroline explained, but still much better than the almost 39% regular rate. And remember, this exemption program, a special program for priority projects, applies to businesses that would not qualify for any other of the incentives. Okay, so if the project is a hotel, it will qualify for the tourism exemptions and would not qualify for these ones. There you see, you get also 100% exemption on dividend distributions from the business. You get 100% exemption on interest received from bonds or debts issued by the business. In terms of municipal taxes, you get 25% of exemption, but the municipalities can increase it up to 75% if they want to. And this investment credit is one of the most important attractiveness of the program, is that you can generate a credit of a maximum of 25%. Of 25% with a minimum of 5% guarantee. credits in Puerto Rico are very special because they come and they are part of the financing structure of your project. Why? Because if you get a credit for the investment you're making on the project and you don't have use for that credit, you can monetize it by selling it in a secondary market. There is a strong secondary market for credits in Puerto Rico, and every year people, taxpayers, are looking for credits to be used against their tax liability. So this is a very important characteristic of this program. We talk about the municipal exemptions that you can get there, and these are other provisions that were included as part of Act 21. Remember I mentioned that Act 21 conformed the treatment of capital gains in Puerto Rico to that of the U.S. When the law was incorporated in Act 60, the Incentives Code, there is a little bit of a hiccup there, and we strongly believe it's going to be fixed in the near future. The amendment to the capital gains section was not brought in by Act 60. And again, it's very important this is corrected because it's one of the motors of this program in Puerto Rico, being able to have the same treatment as for U.S. tax purposes in Puerto Rico. This is another provision that in the case you're going to be doing these projects in Puerto Rico as a partnership, special tax treatment to the sale of that interest in that partnership will be granted, meaning that it will not be considered Puerto Rico source income and therefore not subject to withholding at source by foreign persons. Some pitfalls that we need to always keep in mind when talking about investing in Puerto Rico, especially with the opportunity zones. Some of them are the same or similar to the ones that Caroline mentioned. And it's, again, remember that Puerto Rico is a foreign jurisdiction for U.S. tax purposes. So every time we talk about doing business in a foreign country, we need to talk about controlled foreign corporations, passive foreign income, and guilty considerations. There are penalties for failure to comply. There are rules and methods and valuations and computations that need to be made. And again, these are not specific for Puerto Rico, but for everywhere an opportunity zone project is developed. This part of the important technical considerations, again, talking about a foreign jurisdiction, we have mentioned it through our conversation. What I want you to take away is that coming to Puerto Rico to do business is going to a foreign country. So if you're not going to come to Puerto Rico yourself, this must be kept in mind. And with that, we are ready for our third and last polling question. And we just would like to know if you would like to receive more information on the other incentives that are available in Puerto Rico. Remember, we talk about tourism, manufacturing, R&D, agriculture, and others. Yes, overwhelming, an overwhelming yes. So we will be contacting you to find out more about what specific incentives you have in mind, so we can assist you and provide you the information that you need. Also, before we go, we would like to talk to you a little bit about Grant Thornton and who we are. We are Key Grant Thornton, and we are part of a global network. We are right now in more than 135 countries around the world. But in Puerto Rico, we are almost 45 years old, and right now close to 130 professionals, of which 10 are partners. And And for many years now, 34 years, we have been part of Grant Thornton International. Given Grant Thornton is a pure Puerto Rican entity, and all our 10 partners are from Puerto Rico right now. You can keep up to date with everything that is happening in Puerto Rico through our publications and our app. We have a mobile app which is native to iPhones, iPads, and Androids. So you can download it for free in the different markets, and you will receive push notifications whenever we publish, and we do publish a lot, about recent developments in Puerto Rico. With that, and I don't see questions on the Q&A, either we confused them completely or everything was very clear. These are our 4 partners in the tax department. And with that, we end our webcast for today. Thank you again for joining us and accepting our invitation. Good afternoon.